Welcome to another show of Super Prime UK. Welcome back, James. How are you doing? How's the year going so far?
Yeah, really good. Thanks, Rob. How about for you?
Busy, busy, busy.
That's it. Mipping on the horizon as well.
Very excited, yes. As always, definitely hard work. I know people don't believe it is, but it really is. And hopefully it'll be fruitful, although the weather isn't looking so good at the moment. So it could be another washout like last year, unfortunately.
Yeah, hopefully not.
So what are the latest updates? How are we looking?
Yeah, thanks, Rob. So I think the main news is obviously the situation in the Middle East, which obviously had repercussions throughout, the UK and a number of different markets. I think the price of barrels of oil over $100 a barrel has sent ripples through the market as it raises, chances of heightened inflation, not only in the UK but across, a number of other European nations and nations across the world. So I think as of today, I think the price per barrel is around $103 per barrel. So 13-14% up on the previous day, and over the past month, the price has risen about 60%. So just tells you the scale of this stepped increase, this jump in price, which everyone is currently adjusting to. As we were talking about before the show, Rob, some of the gilt yields have also soared. Fears, like we were saying, of the inflation, but also some of the speculators prompting bets on a potential rate rise later this year, maybe on a worst case scenario. However, where does that leave us currently? We've got the Monetary Policy Committee meeting in the next couple of weeks. It was looking quite likely that there was going to be a rate cut down to maybe 3.5 on the base rate, but feels almost certain now, Rob, that we're going to rates are going to hold at their current levels. So that's maybe a bit of a blow for the residential market. Yeah,
and also the wider economy, both domestically and internationally. Once again, we're in uncertain and volatile times. Uncertainty is the new certainty, one of my catchphrases. And here we go again. All we can hope for, James, is that the situation in the Middle East ends as quickly as possible and the markets regain some kind of normality as quickly as we can, because something that drags on won't benefit anyone.
No, definitely not. And it just came on the back of some more sort of slightly positive news on the UK housing market, I'd say. Yeah, Halifax released their HPI data just at the end of last week. House prices were a record high, just average for the UK at just over 300,000. Month on month, 0.3% increase, following a just under 1% increase since January. So the data there, holistically across the UK was, pretty positive, just on the back of the news that, there's not going to be probably a rate cut now, and just some of the speculators talking out maybe inflation rises throughout the year, and also, worst case scenario, maybe a base rate increase.
Yeah, I mean, every meeting we've done this year has been relatively positive. The sentiment has been good. Hasn't been followed by huge volume of transaction, but we have seen a little bit of momentum that has been dampened, unfortunately.
Yeah, and obviously we had the FCA, which relaxed some of the mortgage lending policies just at the end of last year, which assisted, some of that first-time buyers and those which were self-employed, whereby income was treated slightly differently, whereby it was more variable or irregular. So I think that was maybe starting to filter into the market. There was some, very competitive mortgage deals out there from Nationwide and Lloyds within the past 10 days as well. I think, around that 3.5%. Mark, although with various arrangement fees and quite strict criteria, but we just felt like, Rob, we're on the cusp of things coming together in the market to get a bit more volume, a bit better sentiment.
Yeah, I think we're going to get put back now in a holding position. Wait and see, because the current events will determine what the rest of this year looks like. And we can't overreact, and markets, yes, the stock markets and currently the oil market and even the gilts market can move very quickly with that volatility. Our market, the domestic market, will be now in a bit of a holding position. It will keep moving, but maybe at a slightly slower pace until we get a better understanding of what happens to interest rates moving forward and whether there's going to be inflationary pressure once again.
Yeah, and just doing a little bit of data research on the London flat market, which does continue, to struggle against the house market. Buyers largely deterred by those sort of high service charges, maybe more limited outside space, and the stretched affordability here in London mainly. The average ground rent and service charge for London was about £2,750 per annum. So. Fairly punitive, and if people can afford a house, or maybe they move to a different area to afford a house over a flat, that's something we're seeing a lot of buyers favour. The more flexible working we're seeing now means that the location, the central location, isn't quite as critical to a lot of buyers as it was, as we've seen in previous markets.
A couple of big deals have taken place. We've been working on a few of them, luckily for us. Couple that you wanted to mention, or one or two, James?
Yeah, the Whiteley developments, £52 million penthouse sold a couple of weeks ago. So I think that's proof itself that the super prime market is still functioning, albeit at more subdued rates. Whether we see some of the Middle Eastern buyers come over a little bit earlier this year, as we normally see in the summer, maybe that might get moved forward to the spring, might give a little bit of a bounce to the super prime market, possibly, as some of their plans might be accelerated.
Yeah, exposure to the Middle East market has been huge and growing and growing. Some of our data and analysis has reflected in central PCL a shift up to 50% market share now in certain locations. So we've seen a dramatic shift there, and it remains to be seen whether that continues and even strengthens. So again, we're all over that data, and we'll be watching that space as the year moves on.
So Rob, just in terms of some London data over the last couple of weeks, new instructions pretty steady, 428 and 482. So flow of properties to the market has been fairly strong. Under offer properties 250 and 217 the last couple of weeks, while sold properties have been strong. Over 100 the last 2 weeks, 139 and 125. So I think that shows that the London market, although slightly price sensitive, slightly subdued, it is still functioning. And actually, those sold figures are, if these levels continue, that would be a much higher average than we saw in 2025.
Yeah.
And then just in terms of we had the spring statement as well from the Chancellor, so just outlining some of the growth forecasts for 2026, which got slightly downgraded from its initial prediction and forecast by the OBR. Obviously, a lot of the data here, it's come at an unfortunate time. A lot of the data is not reflective, and it doesn't factor in some of the unsettled state of affairs in the Middle East. So we're almost going to have to do a bit of a regroup on some of these statistics, some of the data, some of the forecasts, because it just hasn't captured where we are in terms of the economy, and especially as we mentioned earlier in the show about the price of oil, which is going to have an impact across every market virtually. I think there was the eye-catching claim that probably got the most airtime about the sort of everyone's £1,000 better off. I think some of that, I'm sure everyone's heard that in the press. I think a lot of that has already been factored in.
Yeah, let's hope that for everyone's benefit that's the case.
Yeah, quite a lot of positivity in the spring statements. So again,
I'd say better than expected. But a few weeks on from that, unfortunately, probably not going to play out that way. But let's wait and see.
I'm not sure they can, to be honest. Never been done before in England. But Arsenal now in the driving seat once again for the title. Had a bit of a wobble. A number of results didn't I think it's the performances rather than the results as well. I haven't quite been there. Who's getting relegated as well, Rob? There's sort of teams down there.
Don't want to comment on that one. It could go any way. Let's put that one on hold and the quadruple on hold until we regroup next time. And a few of those situations would have been decided by the next time we meet, hopefully with better news on the economic front as well.
Look a bit clearer.
Thanks, everyone. Thanks, James.
Thanks, Rob. Thanks, everyone.